Have you ever heard of standing on the shoulder of giants? It kind of feels like this. It's so mesmerizing how you can see over the distance and a bigger picture. The word standing on the shoulder of giants is a metaphor that refers to the idea that we can make great advances in knowledge and understanding by building upon the works of those who came before us. One of the giants in the investing space is Peter Lynch. And today we're standing on his shoulder to learn and have a better understanding of what investing in a company really means. One of the rookie mistakes that everybody does, especially those who just started investing, is to look at the stock and think of it as just a ticker symbol. It's when you're looking at this, and only understanding that sometimes it goes up or down.
Stocks are not lottery tickets. There's a company behind every stock. If a company does well, the stock does well. It's not that complicated. People get too carried away. And first of all, they try and predict the stock market. That is a total waste of time. No one can predict the stock market. They try to predict interest rates. I mean, if anybody would predict interest rates right 3 times in a row, they'd be a billionaire. Considering there's not that many billionaires on the planet, it's very, I had logic, so I had a syllogism and studied these when I was at Boston College. There can't be that many people who can predict interest rates because there'd be lots of billionaires.
Investing in buying a stock means you're buying ownership of a real company. For example, I own 55 shares of Apple, which makes me a part owner of the company. And I also own 25 shares of Microsoft, which entitles me to the company's dividends. And so far, every 3 months I earn $17 of dividends from Microsoft and $12 from Apple. When you buy a stock of a company, you become part owner of that company. And like what Peter Lynch said, it's not that complicated. You just need to understand and buy companies that are profitable, meaning they can manage their debt, they can sell their products consistently, they can remain relevant for a long time, and they can keep most of their gains from the business. If the company that you bought passed these criteria, the stock will definitely appreciate and grow. Trying to predict the stock in the short term is not a profitable strategy. And investors, especially beginner investors, should focus on understanding the company's fundamentals and make an informed investment decision. Before buying a stock, you should at least be aware of the company's revenue, cash flow, debt, profit, and customers.
The important thing is you can't get too attached to a stock. You have to understand there's a company behind it. You can't treat this like your grandchildren. No, you have to deal with the stock and say, I understand the company, and if it deteriorates, if the fundamentals slip, you have to say goodbye to it. If one rule you want to remember is the stock does not know you own it. This is a breakthrough. So don't get, you have to understand it and say they're doing well, and as long as they keep doing well, my best stocks have been my 5th, 6th, 7th year I own them, not my 5th, 6th, 7th day. So you have to understand that and stay with it.
Many beginner investors put emotional attachment to a certain stock, making them ignore the warning signs that the company is struggling. Investors shouldn't get emotionally attached to a stock and instead pay attention to the company behind it. The best example of this is the bankruptcy case of a company called Hertz last 2020. Because of the impact of the pandemic, their stock price plummeted to less than $1 a share. But despite of the bankruptcy and the declining stock price, some investors continued to buy Hertz stocks. This was likely due to an emotional attachment and reaction to the stock, or a belief that the company would recover. Unfortunately, those investors learned a very expensive lesson. By the way, if you're just meeting today, hi, my name is Ron and welcome to Pinoy Stock Investors, where we help our kababayan start their investing journey. And if you're getting value in this video, make sure to give it a like and subscribe to get more videos like this. Now, one of my favorite investing advice that beginner investors will benefit from, and it's very simple, is this one.
The single most important thing to me in the stock market for anyone is to know what you own. I'm amazed how many people own stocks. They would not be able to tell you why they own it. They couldn't say in a minute or less why they own it. Actually, if you really press them down, they'd say the reason I own this is the sucker's going up. I mean, that's the only reason. That's the only reason they own it. And if you can't explain, I'm serious, you can't explain to a 10-year-old in 2 minutes or less why you own a stock, you shouldn't own it.
See, it's very simple. Just buy what you know and what you understand. I'll give you an example. The company makes cold drinks in a can. The more drinks this company sells, the better for the company. And if you guessed it, yes, it's Coca-Cola. I own stocks of this company and I don't worry about recession. As long as there are people who enjoy and buy the product, I'll keep holding on to the stock, take the dividends, and the price appreciation with it. It doesn't mean that you will forget about the fundamentals. Like what I mentioned earlier, you should be aware of the profit. Understand if the revenue is going up, check if the debt is going down, and the cash flow should at least, at the minimum, be consistent. And the customer should know the product just by describing them without mentioning the name. Remember that these are not financial advice. Make sure to do your own research and consult your own financial advisor before investing your money. Standing on the shoulder of giants is a powerful way to learn and grow. Peter Lynch is one of the giants in the investing space, and his insights and strategies can help us become a successful investor. These giants of the industries leave huge footprints that we can track and follow. It's up to us which footprints and directions are we going to take. We should be inspired by their achievements and learn from their ups and downs. And who knows, one day we might become one of the giants in the investing world ourselves. Now, of course, a lot of giants, or should we call them super investors, invest in different assets and companies. Let's find out if copying super investors is actually an effective strategy. Click in this video to get a list of billionaires and see where to find their portfolio.